We're going to go ahead and get started. My name is Ryan Gibson, the Chief Investment Officer here at Spartan. And I'd like to just get a few disclaimers out of the way before we get started. And we're not offering any investment advice. Do your own due diligence. This is just a general overview. Please review all offering documents and materials. And if you have questions about tax and legal, please seek outside counsel. So with that out of the way, we're going to go ahead and get started. We'll get right into our offering that we have tonight, but we just wanted to kind of talk about high level, sort of how our investment opportunities in private debt work, because we have quite a good track record with our investment opportunities here at Spartan, and that starts with a good borrower. So all of our private and debt investments, or at least this private debt investment, is personally guaranteed by the three principals of SIG that have over $100 million of collective net worth and over $3 million of liquidity across the borrowers. And so myself, Scott Lewis, and Ben Lapidus are signing on the loan and giving you a personal guarantee for this debt. So some of the benefits of private debt that may be unknown to investors, I personally like the shorter term nature of it, but really when I use it for my self-directed IRA, you don't have to pay any UBTI or UDFI. So it's very advantaged for self-directed retirement accounts that otherwise would have to pay tax on leverage or potential UBTI tax in an investment. So really like that it has that advantage to it. The second thing that it has is it has predictable monthly payments. Particularly in our investments, we do monthly payments of interest. So every month the investors get 7% per annum paid monthly, and that's a predictable cash flow that happens on the first of every month. We also pay a point up front, and that it means that when you fund the investment for private debt, we pay 1% point on the day that you close or thereabouts. It might take a couple of business days for the payments process, but generally at closing or at funding of the investment, we pay a point for this particular offering. And then obviously, I think one of the larger benefits is just a shorter timeline for repayment. If you're looking at something that, maybe you have a little bit of liquidity that you'd like to deploy, you don't want it sitting in your bank account fighting against 9.1% inflation. You'd rather put it to work, but maybe you want that money back in about a year or so. This is a very good shorter timeline for repayment. Now, we don't have a liquidity option or anything like that. It's a 9-month term with a 6-month extension. However, if you're looking for a shorter term maturity, private debt from Spartan can really help with that. So why private debt? We have used private debt in the past because banks are slow to fund acquisition debt. If you remember, historically, we've done deals where we maybe only have 4 weeks to close, and it takes too long to get the acquisition debt from a bank. Another reason might be banks get backed up. This is what happened pretty much all through last year and into the new year, where banks take a little bit longer to finance, and we're competing against other operators that are paying all cash for properties like publicly traded REITs. We also like that construction debt typically has a higher interest rate. So in the case of the DFW portfolio, the reason why we didn't get the construction debt from our lender is because if you were to do that, you're going to pay a higher effective interest rate on a lot more money and cost the portfolio a higher monthly payments each month if you do that. So for example, we got quoted, I think, a 6% interest rate when it included the construction financing. However, with this portfolio, we got a SOFR 2.05% with a floor of 3% when we just took on the acquisition debt. So our capitalization plan all along in this portfolio has been to get the lower interest rate on the greater loan against the portfolio, and then take private debt out on the construction side of things to save the portfolio a pretty significant amount of money and provide the flexibility to build our expansions and conduct our initial improvements. This also benefits our investor network. Obviously, if you go to a bank and you get their money, that benefits the bank. If you go to our investor network and offer private debt opportunities, it gives our investors something different that they're not used to typically getting. Usually it's a 5-year hold, and it's a longer term investment of equity. In this instance, we're doing private debt, which provides a shorter time horizon. The other thing it does is it provides flexible capital that ultimately benefits our equity investors. And what I mean by that is we have the ability to deploy capital more efficiently with private debt than we do with regular debt. You know, kind of the instance where I was talking above, where if you have a higher interest rate on the whole thing, it's going to be more expensive to the whole portfolio and ultimately cash drag the portfolio. So we really like that the private debt is flexible. So what's our track record doing this? We've had 7 full cycle debt repayments. So if you've been involved in private debt offerings before, we had one for FreeUp Storage Huntsville that was paid off, FreeUp Storage Pea Ridge that was paid off, Aspen Park, Sharpsburg, Warner Robins, I-20, and Silt. And so we've had 7 full cycle debt repayments, meaning that we took on private debt to do something, build additional units, buy the property, whatever it might be, do the initial improvements, and then we had a lender come in and take out the private debt and close out the investment. And that totals to about over 35 million in private debt notes that we've taken out over the last couple of years, and 25 million fully repaid, with about 10 million still performing. And we've never missed a monthly payment of private debt ever to a bank, to really anything across all the borrowers, personally or in the business side of things, or at Spartan. So let's kind of dive into the offering that we have tonight. So this is the FreeUp Storage DFW Portfolio private debt offering. Again, part of our capitalization plan to fund the expansions. We're doing monthly debt payments with a stabilized 1.57 DSCR, meaning that once we pile on all the private debt and build 160,000 square feet of expansions, once we stabilize that, we're looking at about a 1.57 DSCR at that point in time. And these are obviously in the high growth markets of the DFW Metroplex. So overall, investors have a minimum of $50,000. 1% is paid at closing, 7% per annum interest, and the estimated term is 9 months, and we pay monthly. And so just expanding on that, starting from the top left at closing, you're going to get $500 on the day that we close. So that's a 1% point paid at closing. And then every month you're going to have consistent, predictable monthly payments of about $291 for 9 months. So if you were to go exactly 9 months and the investment were to conclude, you would have made about $3,119, or about a 6.25% interest in 9 months. And that's basically the kind of the overview of how you get paid. Now, if we were to extend for 6 months, we'd pay another point, so $500, and then we would have a 6-month continuation of that $291. That comes with a personal guarantee as well, as we mentioned that earlier. These are the facilities throughout the Dallas-Fort Worth metro, and these are the planned expansions that we have in the portfolio that we'll be using the private debt to fund. And you can see we have about 160,000 square feet of planned expansions across the portfolio. And tonight I wanted to talk a little bit more in detail about those expansions. So we've already started construction on these expansions. We already have a little bit of debt on the property that provides the expansion capital. So this one, you can see in the red boxes, we're expanding FreeUp Storage Tyler. This is one of our Tyler properties in the DFW portfolio. You can see the left there, the red squares and the rectangle there. That's the slabs that we've already poured a few months ago, or about a month ago. And we've already started to put up the steel and start to frame out the units you can see on the right there. So that expansion is going to be finished and delivered in the October time frame. So you're probably wondering, okay, so at the end of this investment, how are you going to get my money back? How are you going to pay my cash back? And I think these two pictures summarize it nicely. So our lender won't fund construction. However, they will fund once the facility is built, meaning that once all that metal and the roof is on, insulation's in, and we get the keys to the building, that is when the bank will reevaluate and say, okay, are you maintaining at least a certain debt service coverage minimum with revenue? And then that is when the recapitalization of the debt will happen. So that'll be kind of at a rolling basis throughout the life of the investment. So we build the facilities with private debt. It takes us about 3 months. This facility will take us about 3 months to throw up. And then once we have the certificate of occupancy, we use the existing lender to take out the private debt investors. And that's sort of the plan. And we've done this over and over and over again. We've done this with multiple lenders across multiple projects, and it works really well. The next expansion we have is at Ferris, our FreeUp Storage Ferris site. Again, this is inside the DFW portfolio. We're building about 30,000 square feet there in the red box. We're taking that kind of inefficiently used RV storage and turning it into climate-controlled units at the Ferris location. Again, same sort of thing. Non-climate units at the Flint expansion is about 10,000 square feet, so a really small expansion right in the red boxed area. And again, FreeUp Storage Paris, we have a 25,000 square foot expansion, and then FreeUp Storage Terrell, we have a 40,000 square foot expansion planned. And overall, I kind of put the slide up on the screen that talked about how much demand there was at each site. The Terrell and Tyler sites are 98% plus occupied. So they have a really strong demand, and people are kind of beating down our doors to have more storage units. So we really feel confident and have done a complete feasibility study for all these properties to prove that they have the demand that we're projecting to accommodate the number of units we're building, and that's available on the investor dashboard. So what else do we do with the money? Well, we rebrand all of our facilities into our FreeUp Storage national brand, and most of that has taken place. We repair the drive aisles and we coat them for a fresh, clean look. We've already deployed about $1.5 million of capital to do that. Throughout the portfolio to do all these improvements, I should say. We redo the roofs, we renovate the offices. You can see that's one of our office renovations on the right-hand side. We repair any building damage, we replace all the security cameras with modern systems, and we enhance the signage of the facilities just to get it better marketing. We do provide full financials. So we bought this portfolio in October, November timeframe last year. We kind of closed in a couple of different tranches, and the first full month of financials that we have that we share with our investors is starting in December of 2021, and you can see that we have trailing financials all the way through May of 2022, showing the financial performance of the portfolio. And as you can see, net operating income trend has been up over time with some variations, mostly due to collections. When we take over a portfolio, there'll be a lot of prepaid tenants that we take revenue for, which is why you see that revenue sort of normalize as we go along. So who does the deal? So this is kind of the team behind our projects. You can see this is our Spartan team, and our leaders here are CEO Scott Lewis, myself, Ryan Gibson, and Ben Lapidus, our Chief Financial Officer. We're the borrowers, we're the guarantors, and the partners at Spartan Investment Group. This is our construction team. This is the team that will actually be building the units from the corporate side of things. You can see Aaron Saunders is our Managing Director of Spartan Construction Management. He leads the SCM team and has a lot of years of experience, to say the least, of building industrial. He comes from a really strong background building industrial facilities for Casey Industrial in Colorado, and he has built and sort of started the Spartan construction team and leads all of our project managers and all of our site superintendents, and then ultimately oversees all the subcontractors that are building the units. We have deep relationships with our steel providers, with our door providers, etc. We do a lot of volume. We have a lot of economies of scale, and we've built a lot of storage. I think alone this year, we have over 36 million in projects underway. And each of our Spartan staff, depending on what project they're on, they are licensed general contractors in the state that we're building the additional units in. This is our FreeUp Storage team. So our property management team that oversees the books, the regional to operations manager, down to the district level, and everybody in between that has a hand in helping our FreeUp Storage team on the ground better manage the facilities and collect the revenue and do all the training that we do with our staff to keep the portfolio really moving along. So as a private debt investor, what documents do you receive? So first thing that you get is the investors are going to sign a subscription agreement, just like you always do, just like you do in a normal equity investment. There's an accompanied PPM, there's a offering memorandum, etc. And the subscription agreement is really the first thing that you sign that's available on our dashboard. That kind of kicks off the process to invest. And then we provide you separately after you do that with a promissory note. So this is going to have things like your name, how much we promise to pay you, and the terms of the agreement, and the monthly payments. This is also available on the investor dashboard. So if you wanted to download it and look at it in advance, it's there in the deal room for the DFW storage debt. And lastly, investors are provided a personal guarantee. This is a document that is signed by myself, Ben, and Scott Lewis, and this will be uploaded to your investor dashboard on the day of funding so that you have your personal guarantee to accompany your investment and the guarantee that you'll be repaid. So what are the next steps? You can sign up on our website. You can see a little circle there. That's where the investor dashboard is, or otherwise you can go to investors.spartan-investors.com. You can use your existing login to your portal. If you don't have a login to your portal, you can reach out to one of our team members at investors@spartan-investors.com. And there's our contact information on the screen. And we have just opened funding. I know that we've had a lot of interest in the debt offerings just because we do them so infrequently. But if you're interested in registering or logging for the debt, you can actually go onto our dashboard this evening, fill out a subscription agreement, and get everything moving along. So with that, I'm going to open it up for a few questions. I do see a Q&A coming in here. So if you have any questions, feel free to put them in the chat window. We'll go ahead and go through the questions tonight. So the way that the note is structured is that it is a promissory note that the DFW Self-Storage Portfolio LLC entity is responsible for paying. So that is a promissory note directly from the DFW Storage Portfolio, and it is owed by the DFW Storage Portfolio. Additionally, it's backed by a personal guarantee from the partners of Spartan. You have to be an accredited investor to invest, correct? This offering is done under 506C, and it's open to accredited investors only. Timing for funding is this is open. It's based on first come, first serve, based on funds receipt, and we can start funding. We're opening this up for funding this evening, so the wiring instructions and everything will be available on the dashboard. The investors start earning funds immediately. So if you funded, let's just walk through an example. So today is Monday. If you funded tomorrow on Tuesday, we would process your 1% point right away based on funds received. And then your first monthly payment would be pro rata based on the remaining days in July. So you'd have about a 10-day interest accrual right away. Based on prior experience, how often do you expect this to be open before it fills? Well, last time we did, I think we advertised a private debt was Aspen Park. That filled up in like 30 minutes. It was a $1.5 million debt raise. Can the term be extended? Well, right now it's a 9-month term with a 6-month extension. So that's the only extensions that we have in there. Okay, final call for questions. And again, this will be recorded and sent out. There'll also be an offering email that is sent out this evening, and it'll have a recording of this webinar. It'll also have the offering memorandum and then the links for funding. And the funding is now open on the dashboard. So I'm not seeing any other additional questions. But if you have any questions, you can see on the chat screen there, investors@Spartan-Investors. If you have any questions, feel free to reach out, and this recording will be available and sent out to you shortly. Thanks everybody for attending.